Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. Today is Monday, October the 4th, 2010, and like we do every night, it's time to look at the markets. Check it out. Okay, let's start off today looking at the NASDAQ. This guy has broken the uptrend line that we talked about before. This is your uptrend line right here. All right, you pierced it before you broke it. That's what you commonly see. Then you broke down through it, closing below it, and now we're rolling over perfectly. We do not have a gap at this level, so there's no reason to anticipate any move back up to the upside to fill any upper gaps. We have already filled this gap, so there's no problem there. This one over here is on strong volume to the downside. It's a different type of gap, doesn't have to fill for years. These, on the other hand, this one, this one, this one, and that one, and there's one in there, and one over here, and one back here. You can't even see anymore. Yeah, all those are low volume gaps, and they all have to fill. So we got what, 1, 2, 3, 4, 5, 6, 7, 8. Oh wait, 7. This one is not 1. Okay, so yeah, there's a lot of gaps to fill on the downside. We have broken the trend line. We're on the way down here. You'll notice, let me clean that up just a hair. You'll notice we do have a bearish divergence or bearish setup. Look at the low point here of the slow stotch and the lower low here. This is a downtrend. All right, these low points correspond with low points on the chart here and today here. That's still showing an uptrend. It's not fallen far enough. Price activity should agree with the slow stotch, which means the price activity would have to fall lower than this point at minimum. And we know it's going to do that anyway. It's got a gap to fill there and more as well. So nothing to see here except for more moves to the downside. You've also got this bearish divergence on the RSI confirmed. All right, so we have this one here and these low points here and here, right there. Okay, all these signs point south. You also notice we're about to form the bearish crossover. It'll happen this week, so look for that tomorrow, probably the next day, and it'll do like that, forming the bearish crossover, and you expect more selling behind that. All right, makes perfect sense. Light volume today. The main thing is the market's kind of getting some bad news out. We had all bunch of news this week or this weekend, and it was all bad. Nothing positive out there. And we're looking at third quarter, which is expected to be worse than the first half of the year. So when that data starts coming out, it's going to be what everyone expects. So expect the market to continue to go lower. There's going to be the occasional good company here and there, but overall, look at them as a total, and you're going to find that they're going to be reporting weaker and weaker uh, profits, etc., etc. They're going to start, lowering forecasts for the rest of the year and stuff like that. All that stuff's going to be negative for the market and be hitting it left and right. So that's yeah, expect that across the board. Quick look here at the Russell 2000. This one held up better than the rest of them today. Ultimately flat here, but there's no reason to anticipate small caps to outperform anything else in this market, in this environment. And I'm expecting a global recession, or at least recession, if not a global depression. So there's no reason to be a bull here. Again, if the overall markets continue to pull down, it's going to pull down 90% of stocks with it. So there's no sense in trying to be long anything. Also, you'll notice you're above the 80 line. You're above the 80 line. You need to be looking for shorts or tightening up your stop loss limits. There's no reason to be long or buying when you're up here. Wait for the pullback till you're down there if you're going to be long. That's how you play that game. You've got lots of gaps to fill here, lots of bearish divergences, all of this telling you that everything above this line here is going to get wiped out. Actually, we've got another one below 580, so anything above 580 is going to get wiped out anyway, just a matter of time. The S&P 500, same story as the NASDAQ. Look for this guy to continue to move lower. You have broken the upper trend line. You've got lots of gaps on this guy to fill. I mean, a lot. For those people that would tell you that it doesn't have to fill, ask them to show you any place in history where the S&P has had 1, 2, 3, 4, 5, 6, 7 unfilled gaps and just went on happy dory higher. It doesn't happen. Again, we've got the same condition across the board. MACD preparing for that bearish crossover. It'll happen tomorrow. Look like that. Okay. Quick look at Canada TSX. You'll notice this bearish rising wedge formation here. Okay. These typically, whenever you get a wedge pattern, they don't typically trade all the way out. They don't stay in this channel for forever. They'll actually break down about 3/4 of the way. That's normal. So we're looking for a breakdown here. It would make perfect sense. And again, it's on good volume. Lots of volume here on the sell side, so that would make sense as well. Again, Canada is not a situation where they've got as many problems as Europe or the US, but a global recession would actually affect them just like they did back here. All right, so you're not safe anywhere out there on the long side, in my opinion. Okay, everybody and their mother's uncle issued a terror alert in Europe. So, why the FTSE here is just still trading flat here, I don't really know. It's actually going to end up breaking down ultimately anyway, but they're going to pretend like everything's copacetic for a while. That's fine. The end result is going to be a failure anyway. Looking at the RSI indicator on the FTSE, you'll notice she is trending down while price activity is remaining flat. That again would be a bearish divergence. Even though price activity isn't necessarily moving higher, it is still not following the momentum to down. So look for that to snap, crackle, and pop to the downside. Also, you've already had your bearish crossover here, and you do have that rising wedge formation that's going to end up breaking down as well, okay, on your MACD. And again, note to the bars, okay, moving average, I mean not the moving average, the momentum, the histogram here, moving down, growing stronger, while price activity is basically remaining flat. It's going to snap sooner or later. I get asked probably a dozen times a day, what do I think about gold? I think gold is a play based on the fear of everything else. I think you have a whole bunch of financial issues out there with their fiat currencies, and I think the potential for those to fall apart, especially the euro, is driving people to gold. And I think it's got plenty more upside, but again, I would never chase it. I would wait for a pullback. No pullback, no buy. And basically when the slow starch pulls back down below the 20 line, you can consider it at that point. Otherwise, you're chasing, and if you buy here and she pulls back and then starts to advance, then you're just going to kind of feel silly. So I wouldn't play it that way. In fact, I'd wait for the pullback. As I have said consistently, I would not short gold. All right, you can get euphoria out there. You can get news can come out on war and tons of things out there that could happen to make it, super spike on gold, and like we had in oil a while back. And I don't want to be shorting any situation like that. I won't short oil either for the same situation. So ultimately, I'd be a bull of gold, but I'd want it to be in a pullback in a proper situation. Okay, you look at the Dow Jones Industrial Average rolling over here. You'll notice you got a series of lower highs and lower lows. Makes perfect sense for a rollover there. You also notice the slow starch is going lower. This low point here, this lower point here, like this. These low points correspond to this point here and this point here, but there's trending up. That's a bearish divergence. Price activity is going to have to pull back down below that line at least. And again, lots of gaps to fill here, here, and one down here. Okay, get people every now and then will say, the gaps on the Nasdaq don't matter because the Nasdaq gaps around all the time. They always matter. But for those who would like to argue that, you got 3 gaps on the Dow Jones Industrial Average, which almost never gaps. So what do you got to say about that? Oh, I don't know. Maybe they're yeah, it's gonna fall. Quick look here at the MACD. You can see following everybody else, preparing for that bearish crossover. Probably happen tomorrow, maybe a day later. Again, that's your rollover signal that you're looking for. You're getting it. You also see the the RSI is trending lower. All right, all signs point south. Okay, we have a lot of news coming out this week on the economic front, and with earnings starting up, third quarter earnings. So look for a lot of volatility out there. But I think the safe play is to remain on the short side, not the long side here. You got all the signals on the market are telling you you're overbought. Any push to the upside will be unsustainable because you have all those gaps below you to fill, especially on the Nasdaq. But you've also got them everywhere. You've got them on the Dow Jones, you've got them on the S&P, you've got them on the Russell. All that stuff's got to fill when you got a low volume rally to the upside. I don't even care if it breaks out. They cannot sustain a low volume rally. It just doesn't happen. So from a technical perspective, the chart is telling you remain short, vigilant. Look for opportunities to go short, and do not be a bull in this market. You're going to get surprised to the downside, not to the upside. Okay, over the weekend, I went out and I did 7 new videos, posted them in our free video chart school on our website. So there's like, I don't know, almost 50 videos over there teaching you all kinds of different concepts of technical analysis, and you can check those out on your leisure. If you've not been to our free website, it's right there. It's 100% free. It's perfectstockalert.com. All we ask in return, please refer a friend. Also, please subscribe to our YouTube channel, or we'll have to hit you with a stick. A quick look at our disclaimer. The disclaimer, read it and weep. I'd like to thank everybody for sharing our videos online, referring their friends. We crossed over 3,100 subscribers on our YouTube channel the last weekend. So thank you very much for that support. God bless, take care, and I will see you in the next video.